Welcome to the Borderless Podcast, your guide to traveling, investing, and living beyond borders, where we talk about living the life that you want to live, where you want to live it.
All right, everybody, welcome to another Borderless Podcast. This is your host, James Guzman, and today I wanted to talk about crowdfunding. Now, crowdfunding is something that we have not touched on in the podcast before, but I think that it's definitely something that has to do with the information age and how business and investments are going to work in the future and how they are now. It's very interesting. I don't know if people have been paying attention to it, but crowdfunding is something that's been around for a while. It's been growing. There's been several pretty big websites that do kind of regular offerings where people can raise money and then they get trinkets or other types of gifts and things like that. But there has been a real expansion in equity crowdfunding. There's people that are doing $100 million deals in real estate with crowdfunding. There's people that are doing all kinds of business deals with crowdfunding. There's also large companies that are using crowdfunding to explore if there is a market for whatever product that they're selling. And I wanted to explain a little bit before we get into the interview because the guy that I brought on today, Scott Purcell, he's been working in crowdfunding for a while. He's worked along with FINRA to try to work with the regulations so that it would work better for the crowdfunding community. And so he kind of jumps into it, and I think that it might be a little bit higher level for people that are just now learning about crowdfunding. Even though it's been around for a while, a lot of people have not noticed it. So what I mean by testing out a market, for instance, I watched a speech by the Indiegogo founder. I forgot his name. I tried to get him on a couple years ago. But he was explaining what the applications are of crowdfunding. So basically what you're doing is you are funding with your network. And that network could be social media network, your email connections, the people that you know in person, and you can get smaller donations rather than going to big banks and large private investors and stuff like that. So what would be some of the innovative things that you could do with that? Well, he mentioned roads. You can crowdfund roads. Everybody that uses a road, everybody can invest or put money into it, and they could have some sort of use of the roads or something like that. This is all new territory, so you can think outside the box about how you want to structure each deal. So you can imagine that after we take care of the my roads argument that people like to throw around. Well, how come they have to take 60% of my income? Well, who's going to pay for the roads? Well, I'll show you how we can pay for the roads. And he'd given some examples of how they'd done that and in different countries where they actually had crowdfunding projects with roads that had been like crazy smart roads and all this stuff I'd never even heard about. So yeah, now we can take care of the roads. Okay, so now let's move on to the next argument for why you need to take all my money from me. Another thing that I mentioned before was large companies using this. What Indiegogo's founder was saying was that a lot of times crowdfunding makes a business plan obsolete. And I know a lot of people don't like that. It sounds weird. But what he means by that is, I'll use the example that he used. He said that there's a beer company, and if they want to see if they have a market in a certain city that they're not in, they can sell cases or amounts of their product there before they get there. And so then they know they already have an established market. They already have people that have paid for it before they move in. So even though they have money to move in, they still use crowdfunding. So, if you think about that, there's a lot of real innovative ways that people can use this and that people will be using it. The guest that I had on today, Scott, he thinks that all funding will be some form of crowdfunding in the future. We don't know what, how long in the future. But you could see how this, especially I think people that would listen to this podcast, they would like to find a way to get around Wall Street, to get around having to go to banks for money and that kind of thing. If we can raise money for our ventures, at least start the money at a lower level, then it's something that's very interesting. Also, you can cut out the middlemen and give your investors a lot higher return, or if you're an investor, you can get a lot of higher return, and you can have more negotiating as far as the things that you can do. So one of the newer things that has happened within the last couple of years is the Jobs Act opened it up to crowdfunding with equity. In the past, people could do crowdfunding, but they only sold their product. They could only offer trinkets and other things like that, but they couldn't offer actual equity. Well, now companies can offer equity in their business. So basically, you can have your own public company as if it was the stock market, but Wall Street's not involved. There's no actual stock market that's involved. And you can offer equity in your company at your own negotiable rate. Right now, this is only offered to accredited investors, but it seems that they're trying to get it so that it's crowdfunding for everyone. This is something that I talked to a company about before, and they wanted to open it up to everybody, and they asked for my help to do that. But it turns out that as the regulations and the way that the market is right now, it's still not ripe to offer to everybody. But offering equity to accredited investors in a crowdfunding platform is now very doable. You can do it on commercial real estate deals. You can do it on your own business deals or all this type of thing. So like I said, I think if you're able to think outside the box on how this could apply to what you're doing, it's very interesting, and I'd really like to see where this goes. And so I'm going to play that interview that I had with Scott Purcell in a second. I hope that you guys have been enjoying these podcasts. I believe I've done 4 since I've been back on my hiatus, and I hope that you're enjoying it. I've been getting some feedback, but I always enjoy that. Also, if you'd like to give me a review, as always, I will read that on the podcast. It looks like I've got no new ones. So yeah, if you'd like to go over to iTunes and send me a review, I would be happy to read that online. And so yeah, I hope that you're enjoying it. Give me feedback. I always enjoy that. And as of now, I haven't been having any sponsors. I do have a little donation thing up there on the website. If you'd like to throw me some money, that always helps because, I enjoy doing this. I enjoy putting all this information out there and exploring the new ways that we can do business and invest in the information age. And so basically, I've been coming out of pocket for all the hosting and all the stuff that has to do. So if you could help me with that, that'd be fine. I do plan on getting some affiliates and that kind of thing. I was receiving a good amount before I stopped. So I've just got to build up that momentum again and get this going. I've also been thinking about maybe doing some live events, probably on YouTube rather than Facebook. It seems that works better. And, bringing in people from the audience, just normal borderless listeners and readers of the blog, and, having discussions about what they're doing and any type of interesting business things that they're doing or, answer questions and that kind of stuff. So, kind of kicking around that idea. I think that a lot of people like the live videos nowadays. So let me know what you think. I hope you enjoy the interview, and here it is. Borderless. Okay, Scott, thanks so much for taking time to speak with me today.
Absolutely. Happy to be here.
All right. I'm really excited about crowdfunding. I think it's very interesting and, just watching the whole market to see where it might go. This is the first time on my podcast that we've spoken about crowdfunding at all. I'm wondering if we might be able to just talk about some of the basics really quickly, and then how your company, FundAmerica, works into that, what gap you're trying to fill there.
A lot of people don't understand how much technology, how much securities compliance, and how much other work has to go into servicing the back end of offerings. Everybody's excited about creating a website and getting investors to invest in deals that they vet, which is great. And that's what our customers do. We provide the transaction technology so that when somebody wants to invest, they can do it in one sitting and not have to be faxed or emailed documents and not have to mail in checks or go send wires or any friction like that. And if it's a regulated entity, we can help them perform the anti-money laundering checks. We can do escrow. There's a lot of things that go into a successful crowdfunding offering that are under the hood.
Right. And so one of the big changes I know, I'm not an expert on the industry, but I know that there was a lot of people talking about the equity being able to be offered in these crowdfunding ventures because of the Jobs Act and stuff like that. How has that been as far as, I know that it was taking a while as far as working out some of the legalities of it. How is that going now, and how can you help people get through that?
Well, a lot of capital is being raised. The qualified there is this industry has not exploded the way everyone thought it would in 2012 in April when the Jobs Act was passed. Everyone thought there would be hundreds of portals out there doing thousands of deals. Instead, we see just a handful of portals doing a couple hundred deals of equity and debt. Now, that said, although the industry is not exploding, and I think the misnomer, people always used as an example, gee, if only non-accredited investors could have invested in Facebook, how great would that have been? Well, the reality is if Facebook had tried to raise capital from non-accredited investors when they were a new company, they wouldn't have gotten any investors. So it's not correct to think that retail investors are out there scouring, looking for places to put $50, $100, $1,000, $10,000.
Right.
They're not.
Yeah.
And the industry just hasn't exploded.
Right. So we're still concentrating on accredited investors. I think a lot of people were excited about the idea of being able to market to everyone, but I think it's still, obviously it's a much better bet to go after raising money with accredited investors if you're going to.
Definitely.
Yeah. Okay. And so what, with your company, FundAmerica, what is the major type of projects that you are working with? Are they a lot of real estate, or is there a lot of other businesses? And who are the people that are most involved in these type of equity raisings?
Well, our customers span the gamut with the offerings that they have, and we've got offerings for car companies, plane, aerospace, medical, pharmaceuticals. We have a brewery, the BrewDog offering, which they just raised money from over 8,000 investors. But by far, the majority of our activity is in real estate because that's the one thing that investors are gravitating to online.
Okay. And why would somebody choose to use crowdfunding rather than traditional, a bank loan or something like that?
We had a hotel group come in through a broker-dealer to use our service. Their attorney had told them that they really should raise money online and put their data on their website. They'd never done that before. So they were raising quite a bit of money to build a Marriott hotel on the Ohio. Used our technology, our Invest Now button, and they begrudgingly went along with it. So finally, their offering was ready. Their website was done. They put our Invest Now button on it, and they emailed out all of their investors saying, "Hey, we're raising money for this project. Come check it out on the website." They got oversubscribed almost immediately. Their jaws hit the floor, and all the investors moved money into escrow electronically through ACH. So it happened within a few days.
Wow.
Well, what happened now more interesting is the offering got oversubscribed. They allowed it to be oversubscribed. Rather than just doing first in, first out, they wanted to pro rata send money back, so all the investors could be in, because that way they would have them for their next deal. Well, that can't be done very easily in the old world because each investor is going to have to sign a new subscription agreement because that's a material change. Somebody can't say I'm investing $50,000 and you send them $5,000 back but keep $45,000. That's not the contract. One way to do it is to email or fax them agreements, call them, get them to sign the agreement, call them again because they still haven't signed it and sent it, have them fax or scan and email it or mail it or FedEx it back. It's a convoluted process. It's very labor intensive. So what we did is just created the technology so they could email all of the investors a link that they would click, which would take them to the issuer's website, where they would easily electronically sign an updated subscription agreement. So raising money online makes things easy for anybody. And I talk to real estate and other people all the time saying, "Oh, we just do it the way we've been doing it. We don't raise money. We don't use the internet as part of our capital raising efforts. And I just laugh and shake my head and say, yeah, you will.
Right. So would it be easier for someone now, say that you're not, say they're an individual, that you're not, maybe you're working with some people, you've done some commercial real estate things in the past, and you want to put together a deal like this. Is this with the help of your company, could somebody raise some money on, maybe a $5 million or something like that deal? Maybe not something so big, but just to get started on a commercial real estate deal. Is that viable?
Well, sure, they could raise whatever they want. Our the smallest raise we've seen through our system was $75,000.
Oh, wow. Okay.
The largest raise we've seen is $1 billion. So we have people raising $100 million, $50 million, $10, $5, $1, $500,000, $100,000. It's all over the board.
Okay.
To us, it's just technology. It's bits and bytes. So it doesn't matter the size of the deal to us. We still process things the same.
Yeah, that's interesting. And so, I guess that the pretty new part of this is being able to offer equity. If you are to just people over the internet, right? As long as they're accredited investors. So if you have some, idea for, buying and turning over a lot or something like that, or a business, whatever it is, that you can do this over the internet much easier than you could in the past, and you don't have to go begging to your normal financial institutions to get it. And so I think that it's very interesting, and I'm interested to see where it goes. Do you have any ideas about how? Well, first of all, how has this been integrating with your regular banks? And what do you see them opening up to working along with crowdfunding efforts? And do you think that maybe in the future that, what do you think the relationship will be between crowdfunding and traditional banks?
You mean investment banks, or you mean like Wells Fargo banks?
I mean Wells Fargo banks.
They, by and large, they're ignoring the market. It's too small for them. So it's left to some of the smaller banks to be involved. But by and large, unless for a bank, unless the company is going to open an account there and keep the cash after they've raised it, or get a business loan or something like that, they're not that interested in it. There's just not enough fee income for them. Right.
Yeah, I've heard people speculate that, in the future, people, if you're starting a business or some real estate investment or something like that, that it's going to make a lot more sense and it's going to be a lot easier. People are going to be used to raising capital with crowdfunding, and then, after a while, then they can go to a bank and get a larger loan if they want, or stay with crowdfunding. But that'll kind of be, that if you're going for a loan at the bank and they don't want to give it to you, they could just say, well, maybe they could help facilitate or something, but they could work along with crowdfunding. But I don't know. Who knows how that'll work out. So for someone that is an individual entrepreneur or something like that, and they're looking at different opportunities in the market, is there anything that you're seeing that's being underserved, or maybe a specific market or way to use a platform like yours that's not being utilized right now that maybe people want to look at?
Well, we don't have a platform. We're not a portal. The portals are, and then platforms are our customers.
Right. So you just help with the legalities of doing this type of thing, correct?
With the technology, the transaction processing, the compliance, the escrow, the back office services, and especially for real estate guys, they need to make payments to investors going forward of interest, generally interest, because most of this is debt, not equity. So they make interest payments back to investors, also principal payments when properties are sold. So we process all those payments for them as well. Mm-hmm. So it's a full stack of back office services.
Okay. And so is there any specific opportunities in the market that you see that maybe people might want to start taking a look at, or something that you think would be an opportunity in, say, 10 years or something like that people want to start learning about in the crowdfunding industry?
Well, I think there's tons of opportunity. This is the future of capital markets. Mm-hmm. It's how all companies, all real estate deals, everything will raise money online in the future. So the opportunity is to get in early and develop a niche in whatever it is you're good at or have specific knowledge about. The hard things are finding investors, developing and cultivating them, and then having the staying power to survive while this industry builds and grows.
Yeah. Wow, that's interesting. And there's so much to, crowdfunding is just a way to raise money, but I guess there's so many different niches as far as how you want to work your way into it. That's interesting. That you think that's going to be all of raising capital is going to be crowdfunding in the future. How long? I mean, what kind of window are you looking at? Was it like 100 years or something, or 50 years?
Well, you can still find success. A number of the real estate platforms have found quite a bit of success. Realty Mogul, Patchaland, Fundrise, Fund That Flip. I mean, there's so many that are doing really, really well, and there's plenty of room in the real estate market for more. And then others, some like Start Engine, are generalists, but they're finding success. But it's taking a lot of work and a lot of capital for them to achieve that success. Another, one of my favorite examples is Collective Sun down in San Diego, and they are a portal that helps churches put solar installations on their buildings. Raising the money is debt from their parishioners. And so they're a crowdfunding portal that does project by project, church by church, very niche specific, and very successful.
Mm-hmm. And so if somebody wanted to go about, doing that and doing crowdfunding with debt or equity, what are the additional steps that they have to take? And if maybe they know how to do your standard Kickstarter thing or something like that. What are the additional things? Is it a much bigger headache? And, is it easy for someone to navigate through that? And what do they have to do?
Well, if you understand, the main tenet is that you are selling securities. I've had real estate guys come up to me and say, "Oh, I'm not selling securities. I'm just raising money for my project." It's like, yeah, exactly. You're selling securities. If it's debt or equity, if people are getting a financial interest, then the activity is subject to the Securities Acts of 1933 and many others. Mm. So now that doesn't mean that this is a big deal, because it's pretty straightforward and pretty easy. But you do have to comply with securities regulations in terms of the amount of disclosures you make to investors or the promises you make to them. And my suggestion is to just reach out to your attorney. You should have a lawyer guide you through this, especially the first time. You may then have a roadmap and a lot of boilerplate documents that you could do it again and again and again with. But the first time you go through this, if you're not an expert in the securities industry, you need a good attorney.
Mm-hmm. No, for sure. I mean, it's pretty cool though. I mean, you're basically able to sell stock in your company, raise debt without going through the banks, without going through Wall Street. Just doing it yourself through friends, family, community, stuff like that. People on the internet, your followers. I mean, that's basically what we're talking about, right?
Yeah, exactly. It's very cool.
Yeah, absolutely. So, I mean, I see that you've had a lot of experience also working along with FINRA and some of the regulatory agencies. Do you see how has their attitude been towards some of the things that you and other people in the crowdfunding industry have been doing? Are they opening up? And what do you think are some of the things that are coming down the road that we should look out for as far as that goes?
Well, there's several different things. Let me take the two main regulatory organizations, the SEC and FINRA. Both have had staff that were very proactive about crowdfunding. And, even though there was famously with the SEC a lot of resistance from the commissioner, not the new commissioner, but prior commissioners, the staff was hard at work on rulemaking and putting things together and engaging with the industry. The FINRA was working in parallel with the SEC so that their membership application program and their forms and everything, internal processes, would be ready for this brave new world. The problems that we see now tend to be more on the enforcement or examination side, because you have a lot of people in both of these organizations who really are not up to speed on all of the rules and all of the nuances. So they tend to view things through a historic lens that they already know, a regulatory framework that they're comfortable with that really isn't yet adapted to an online world. So they're working on it. Everybody has good faith and good intentions here. It's just taking a little while to shake out.
Right. And as far as I know that a couple of years ago there was, a lot of people talking about the Jobs Act, that it was going to open up equity crowdfunding for not only accredited investors but also just the normal public. I actually had a real estate company that was ready to put me on board. They wanted me to help them as far as raising money and stuff because they didn't know anything about the online side of it. But they didn't end up going through with it. So, like you were saying at the beginning that, you're still better off just going, well, so can you explain that to me? What happened with that? Can people raise equity with non-accredited investors or will they be able to eventually, or how's that going?
They can. There are different securities regulations for each one. Legally, or from a regulatory perspective, crowdfunding, securities crowdfunding, whether it's equity or debt, is only regulation CF, regulation crowdfunding. And that is where companies can raise anywhere from, $1 to $1 million from anyone, accredited or non-accredited investors. And there are rules and restrictions on that. To raise money from non-accredited investors, or under Reg CF, you have to file a Form C with the SEC. You have to make sure that investors don't invest more than really a couple $1,000s each. There's some math formulas that if they're high-income people, they can invest a little bit more. That's actually per year, not just in that offering. So there are ways to do that. You can only raise funds on a registered FINRA member crowdfunding portal, and like a Start Engine or a Republic or others that are doing such a terrific job with this. But there's other things as well. When we say crowdfunding in non-regulatory firms, people use the word crowdfunding to mean not just Reg CF offerings, but anything under the Jobs Act. And those are three primary things. Reg CF, up to $1 million from anyone. Reg D, which is the new 506C, where you can advertise your offering publicly, which you could never do before. It was illegal. You could advertise your private securities offering however you want on the internet. You can hire a blimp to circle the Super Bowl and drop leaflets on the crowd. You can do whatever you want to raise money. And you have to provide a private placement memorandum and things like that. But you don't have to use a FINRA member or SEC registered firm. A lot of broker-dealers do this, but the vast majority of issuers are not using any regulated entity. That's accredited investors only, though, and you have to have reasonable certainty that the investor really is accredited. So people use services like verifyinvestor.com to get that verification. And then there's Regulation A. Regulation A is kind of like an IPO, but it's not necessarily public. It's just an unrestricted security. And to do that, you have to file forms with the SEC and go through a review process and an acceptance process. And once you're accepted, you can raise up to $50 million from anyone, anywhere.
Wow, okay. And are there a lot of people that are, it doesn't seem like that there's as many people as I would think that are out there actually taking advantage of this now. And I know there are. Let's just talk about real estate specifically. I know that there are companies that are raising tranches of money and doing different deals, and they have been for a while. But is this industry growing? I mean, maybe that's just me. I just don't notice it. But it seems like there would be a lot more than what I've seen. We
being the royal we, the collective industry, we all thought there would be a lot more activity, and this would just be exploding and going through the roof. The reality is, it's not. There are deals getting done, a lot of them. My firm alone, we see 70 new escrows plus open every month, and many, many millions of dollars of investments going in and deals getting done. So there is money flowing. It is happening. People are getting good returns. Depending on what they're investing in, they're making money or they're losing money. They need to make those investment decisions. But it's growing slowly. It's growing, but it's growing slowly.
Okay, and for someone that might be interested in investing in this, I mean, as compared to your standard investment in, I guess it wouldn't be like buying a real estate property yourself, but I guess you could compare it to a REIT or something. What are the returns like in comparison to your standard real estate investments?
Well,
let me ask it another way. What would a deal look like for somebody that's? I know that they're structured differently, but what would a deal look like for someone that is going to invest in a crowdfunded by equity real estate deal?
Well, there's two ways to invest in real estate. One is to go out there and buy the property yourself and then manage it yourself. The other is to hand money to somebody that is hopefully a real estate professional that is then going to go find the properties, analyze them, rehab them, rent them, sell them, whatever, and provide a return to the investors. Now, in doing that, they're going to take a piece of the action, as they should, whereas if you bought the real estate yourself, you get everything, or you might share it with a property management company. So those are really the two ways to do it. So the returns when you invest in someone else who is then managing the project will be lower, most likely, than if you did it yourself. Then again, they would make an argument that they're professionals that are choosing the properties better than you could as an unsophisticated real estate investor. So I would, I buy real estate personally, but I would trust somebody more than I trust myself. I'm not good at picking that stuff. So, the returns that we see promised, or target returns that we see on different websites, on different offerings, range from a low of 8% to a high of 16, 17, 18%.
Wow. That's nice. And how long is their money usually tied up for that? It's just as long as they'd like it in there, or?
We see offerings that go anywhere from 6 months to a year to 5 years. Okay. Most seem to be in the 1 year range.
Well, yeah. So I mean, if people maybe they're having trouble wrapping their head around it. I mean, if you could just think about if you see a deal or somebody in your neighborhood sees a deal, say it's again an office building or something like that, rather than having the bank involved or getting all these other people involved, you can actually do it yourself. Set up a crowdfunding campaign, market it yourself, and you can raise money just straight from the people around the building, in the city, and everybody involved in it. Pretty much, it would be known who it is, and you'd be cutting out a lot of overhead, and it's just kind of a different feel, a different way to run the business. And it seems like a lot of people they're still not as familiar. They're not familiar with it, so maybe they're a little hesitant. But I think it's really amazing. There's a lot of people. I'm sure a lot of people that listen to this podcast, they are tired of going through the banks for everything and all the regulatory agencies and all the paperwork and everything that you have to do. And Wall Street. I'm sure a lot of people are fed up with a lot of the investments having to go through Wall Street. So this way, you can do it right in your community, and it's really groundbreaking.
Yeah, it is. It makes it easier for everyone. It makes it easier for investors, and it makes it easier for the people who are raising money to do these projects.
Yeah. So how would you recommend it? Say that somebody is interested in doing something with equity. How would they get started with this? They just need to start learning, or is there any companies that they need to go to? I know you mentioned a lawyer before, but how would you recommend somebody navigating from the beginning? Say they want to, we'll say a real estate deal. How would they get started today doing that?
I think they do a couple of things. One is you can go to our website, FundAmerica.com, and there's quite a bit of information there and content on some of the back office services and the things that are needed. And then they should look at some of the platforms out there that are doing different things. Look at StartEngine.com or Republic.co, or look at Realty Mogul or Fund That Flip. Or some of these things, and look at what other people are doing and how they're doing it, because these are all successful companies. And then you get an idea whether you want to emulate what they're doing or just do it yourself on your own website for your own, one-at-a-time projects. But at least you can then see how people are presenting the disclosures, presenting the marketing materials, and managing the transaction process. Okay.
And I see that, you have your latest blog post here, Real Estate Crowdfunding When Things Go Badly. It's a very exciting industry, a lot of interesting things going on. But, obviously, since it's new, sometimes, you have your ups and downs and problems. And a lot of other people like to always point out the problem and stuff like that. But we know that that's, especially as entrepreneurs, we have to get through these things and kind of navigate through them. What are some things that people need to look out for in this new industry?
Well, you need to make sure that the people who you're entrusting with your money are professionals in that sector and in what they do. So if it's somebody that, pick on real estate, if it's a Silicon Valley tech genius that's created a platform where people can just throw up real estate offerings and other people can invest in them. Well, when those deals go sideways, that person, that guy or girl doesn't have any idea how to do a real estate workout and how to do the things to, turn lemons into lemonade. Whereas a professional, somebody with experience, will, and they'll be able to handle any downturns or any problems that come up.
Right. Yeah, I think in other words, what I'm hearing you say is that when crowdfunding is just a method of raising money. The business needs to, the business needs to do business in whatever industry that it's doing, and the people that are operating the business need to know about that business, that market. Need to have experience doing it. I see a lot of times, not just not only specifically talking about crowdfunding, but with a lot of new industries or new ways to market, new ways to raise money or whatever, that there are people that they concentrate on that thing, whatever it is. Like in this instance, it would be the crowdfunding aspect of it rather than the business itself. People that are experienced in what they're actually doing. So the point is, when people are just concentrating it as kind of a gimmicky thing, the new way to do this and that, rather than using the tried and true practices of the market itself.
Yes.
Okay. It sounds good. I mean, this is very exciting. So if people are interested in doing equity crowdfunding, his company, FundAmerica, go to fundamerica.com and check that out. And he's got his blog there, lots of good information, and they can help you with the legal aspects of it. So is there anything else that you wanted to say before we are done here?
No, appreciate the time and appreciate your audiences listening and weighing in on this.
Okay. All right. Thanks a lot.
Thanks.
Okay. Have a good weekend.
Thanks. You too. Okay. Bye.
Thanks for joining us for the Borderless Podcast, traveling, investing, and living beyond borders.